In today's video, we're diving deep into the current financial landscape, focusing on several critical issues: the implications of banning short selling, the ongoing failures of major banks, and the staggering $2.2 trillion loss in the financial sector. We'll also examine the roles of prominent figures and institutions and how they intersect with these broader economic challenges. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads, and also enter our giveaway. But everyone, remember, this is not a financial advice video. Let's start with a contentious topic: short selling. Recently, there have been calls for a ban on short selling due to its perceived negative impacts on the market. For instance, South Korea is set to impose a ban on short selling starting March 2025 and will impose severe penalties, including life imprisonment for offenders. This move comes in response to the exploitation of the short selling system by institutions, which adversely affected retail investors. The situation in the United States is arguably more severe, with short selling practices impacting various stocks, notably AMC and GameStop GME. Recent discussions have highlighted how firms like Citadel and Virtu Financial have been deeply involved in short-selling activities, leading to significant controversies and calls for greater transparency and regulation. These firms have been criticized for their roles in creating synthetic shares and leveraging them to manipulate stock prices, particularly for AMC and GME. A noteworthy point of discussion is the volume of shares traded. Reports have indicated that the float of AMC stock was traded multiple times over within a short span, a phenomenon often linked to the creation of synthetic shares. This raises concerns about market manipulation and the integrity of trading practices. Despite the high trading volumes, actual retail ownership remains substantial, with many investors holding onto their shares and not participating in selling activities. This discrepancy points to potential issues in the trading system and calls for increased scrutiny and regulation. Turning to the banking sector, the situation is equally concerning. Banks are facing a crisis with significant implications for the broader economy. Major banks like Goldman Sachs and JP Chase are experiencing substantial financial difficulties. Goldman Sachs, for instance, is heavily leveraged and has reported significant losses, including a $100 million loss related to problematic trades. The bank's leverage ratio and involvement in risky practices, such as high-risk derivatives trades, have amplified its financial vulnerabilities. The reverse repurchase agreements, a tool banks use to manage liquidity, have also seen a dramatic decline, from $2.5 trillion to under $300 billion in just 20 months. This sharp reduction in available liquidity poses further risks to financial stability. The reversal of this safety net indicates tightening liquidity and escalating financial strains on banks. JP Chase, a major player in the derivatives market, now holds the largest derivative positions, amounting to $57 trillion. This extensive exposure raises concerns about over-leverage and potential insolvency, especially if these derivative positions encounter significant losses. Similarly, other major banks like Citibank and Bank of America are also grappling with their over-leveraged positions and financial stability issues. The over-reliance on derivatives and synthetic financial instruments has exacerbated the risk of a financial meltdown. Moreover, the broader economic environment is adding to the financial strain. The U.S. government debt has reached unprecedented levels, with daily interest expenses exceeding $3 billion. This soaring debt burden contributes to the overall economic instability and fuels concerns about a potential recession. The combination of high government debt, strained banking institutions, and questionable trading practices creates a precarious economic landscape. In summary, the financial sector is navigating through turbulent waters marked by problematic short-selling practices, banking sector instability, and escalating government debt. These factors collectively contribute to a growing sense of unease in the markets and among investors. As we continue to monitor these developments, it's crucial to stay informed and understand the broader implications of these financial challenges. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.